You just fixed something on your rental property, or maybe you upgraded it, and now you're wondering, can I write this off? Is this a repair? Is this an improvement? And how exactly do I report this come tax time? Now, this might seem like a small thing, but the difference between a repair and an improvement could affect your taxes for years. My name is Matt, and I'm a CPA and the founder of TrueBooks. We specialize in tax strategy for real estate investors and business owners. And today I'm going to break down the difference between repairs and improvements and how each one of those should be reported on your tax return when it comes to rental properties. Let's start with the basics. When you own a rental property, you're going to spend money keeping it in good shape. And sometimes that's small stuff like fixing a leaky faucet or repairing something in a room. But oftentimes it can be big, like replacing a roof or remodels for a kitchen or a whole ADU, for example. And here's how the IRS sees it. Repairs, these are things that can keep the property in its current condition, and improvements are things that increase the property's value, extend its useful life, and adapt it to a new use maybe, such as an ADU, something getting larger or having a bigger footprint. And those classifications determine how you're going to deduct the costs of those repairs or improvements. Let's talk about repairs first. Repairs are expenses that you can deduct in full the year that they happen. So if you spend $600 fixing a broken water heater or patching drywall or replacing a few shingles on the roof, that's a repair. You'll deduct that immediately on Schedule E under repairs and maintenance. Schedule E is the tax form that you definitely should be comfortable with, and that's where your rental income and expenses are reported. Now, repairs are great for cash flow because they lower your taxable income right away. They're entirely deductible. But don't try and squeeze everything through the repair category because the IRS is definitely going to catch it or has a good chance to. This is one of the first things we catch as tax preparers if a client gives us something that says repairs and maintenance was 80 grand. It's very unlikely that you spent $80,000 on repairs and maintenance for a property. Likely some of those costs or most of those costs are towards a large renovation project, such as an improvement. Now on improvements are bigger and you can't deduct them all at once. Instead, you have to capitalize them, which means spreading out that deduction over several years using depreciation. So let's say that you remodel a kitchen in your rental and you spend 20 grand. That's not a repair, that's an improvement. And you'll have to depreciate that cost over 27 and a half years if it's a residential property. And the same thing goes for things like a new roof, HVAC system, new flooring, adding a bedroom, or installing windows throughout the property. These are all items that would be improvements. Even if you pay for it all in 1 year, you can't deduct it all in 1 year. Remember, it gets depreciated, which helps over time, but not immediately, unless you're doing bonus depreciation, which we'll go over in detail in a separate video. Well, how do you know which one is best? And the IRS uses what's called a bar test to classify improvements. The first one is betterment. Did you make the property better or fix a pre-existing problem? Second one is adaptation. Did you adapt the property to a new use? And 3 is restoration. Did you replace or rebuild something major? Most of the time, it's going to be a replacement. If the answer to any of those is yes, then it's an improvement, not a repair. And so here's an example. Let's say that your rental property has an old roof. If you patch a small leak, that's a repair. But if you repair the entire roof, that's a restoration, and it has to be capitalized and depreciated. Another example is you replace a broken window pane. That is a repair. But if you replace all the windows in the house, that's now an improvement. There's also something called the safe harbor for small taxpayers. This gets a little granular here, so stick with me. If your rental property is worth less than $1 million and your total repairs and maintenance costs for the year are less than the lesser of $10,000 or 2% of the property value, you might be able to deduct it all without worrying about the improvement side of things. But that's only available if you meet certain bookkeeping and record keeping requirements, so make sure, talk with your accountant about whether you qualify. You guys know that I'm a huge stickler for bookkeeping, so anytime I can plug, hey, do your bookkeeping, I'm going to. Now here's how to report both of those items on your tax return. Repairs are going to go on Schedule E, and they're going to go under repairs and maintenance. Pretty straightforward, and those are deducted for the full year. Improvements are added to the depreciation schedule and again, reported over time, usually 27 and a half years for residential real estate, 39 years for commercial or STRs. And now you can track these separately in your bookkeeping system, and you technically should. Or if you're using a P&L template, we've got a dedicated column to help you organize it on where you can list out those improvement items. Check the link in the description for that if you want a free copy of it. It's the same one that we give our clients. Okay, so to recap, repairs. These are fixes that don't add value or extend the life of the building, and these are deducted in the full year. Improvements, big upgrades, replacements, and we depreciate those over time. Understanding this difference helps you stay compliant and optimize your tax situation. And if you classify something incorrectly, the IRS can make you go back and fix it, and that's never fun because now you have to deal with an amended tax return. So track your spending carefully, keep your receipts, and when in doubt, ask a professional, ask your accountant, ask your tax planner, someone in your ecosystem that you're working with. Ask them this, how they prefer you to track it, how they prefer you to give them the information when it comes to tax filing so that, again, you're not playing catch up later. And remember, if you need something to help you track your income, your expenses, your capital improvements, your repairs, feel free to click the link below. We'll have a free template that we give out to our clients that you can use too. Now, if you made it to the end of this video, again, a big thank you. If you have any questions on this topic, feel free to drop them in the comments. I'd be glad to answer, and I'll see you in the next one.